25th of October 2023, Wednesday, MAO with Kel once again. Now, Bill Ackman, right, closed his bond shorts. Wow. Is he thinking that the market will rally? Well, I think not. Something bad could be happening. That means that will the Dow repeat what happened in 07, 08? Well, to me itself, it's very possible. I got a chart for you. You really don't want to miss this, all right? So let's us not wait further. Let's go. All right, before we start, make sure that disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, recently, I've been very busy because I have had my 24th intake, and it was great fun. Many but enjoy this. We have a lot of time trading together, making money, and of course, we have great time with all the seniors coming back again to explain to the juniors how the market can be done with a system, and I kind of like it so much. And of course, that took a lot of my time, and I was away, so you missed my MAO video. Thank you for waiting for me. Let's go into details. All right, first of all, remember, just a couple of days ago on the 18th of October, which is like probably about a week ago, I was telling everyone that it's time to buy some Bitcoin. Remember, I showed a chart like this. I said that Bitcoin will come down first, and then the next travel period will be up to 30,000 to as much as 34,000. But of course, I did say that 34,000 will come next year. But incredibly, Bitcoin went to 34,000 in just less than 2 weeks, all right? So I was right and wrong at the same time. But of course, we know that the big boys were buying into this. KSI was green, KCX was black, and of course, my KRW will tell us that the buying was in. So with all these details itself, we know that the upside is going to be there. Now, how high Bitcoin could be traveling? Now, to me itself, we have a strong resistance at about 35,000. If 35,000 can be bridged, we're going to see 36,400 area. Now, do note on the 3rd of November, approximately, this is called a KFC. This is basically a flip cycle. We may see a cycle flip down. So watch out for 3rd of November approximate. This is where traders need to be very careful. Now, that could actually mean that the market could go all the way to the sky, or there could be some profit taking coming soon. So traders, be very careful. 3rd November. I'm going to put it there, 3rd of November, 2023. So guys, watch out for this date itself. Yeah, it's a very interesting calculation that I created on my own. Okay, pretty cool. All right, so let's move on. Okay, and then clear my screen. Yeah, okay, let's go. All right, at the same time now, you can see Bitcoin soar because of the ETF speculation. Now, I've been saying this for many times. I believe that BlackRock will definitely get their go ahead by SEC. And that's the reason why I've been telling people this, don't short Bitcoin. In fact, it's right, crypto traders suffer over $100 million of short liquidation as Bitcoin hit 3 months high. Now, I've been saying this, do not short Bitcoin. I've been saying that next year, 2024, Bitcoin will be a new darling. I believe that Bitcoin will go up into 50,000 again. So I believe by 2024, all right, 2024, Bitcoin will go up to $50,000 again. Now that is because of the US dollar, I believe, is going to come down. Yeah, but of course, if it pulls back and then go up again, that will be the best bet for us. Okay, let's see how things develop over there. But make sure that I share with you Bitcoin is a buy. All right, so at the same time right now, let's go into other thing. Now, Bill Ackman is out his bond shorts. You can see they covered his bond shorts, and it basically got more than 4 million people viewing it itself. And he mentioned that it's too much risk in the world to remain short bonds at the current long-term rate. So it's because the economy is slow faster than the recent data suggests. So what does it mean? It actually means that if he stays short, and if Federal Reserve come in and change and cut interest rate anytime, his bond short will be hit. So that's the reason why he covered it right now, because he's telling people that the data is not good. And if you look at it right now, yesterday after he covered his shorts, look at the volume. Oh my goodness, the volume itself was really impressive. You can see that the volume itself is really, really huge in terms of volume. And that tells you that shorts covering is coming in. Now, I want to take a look here itself. The last time this price, now remember I told you at about 83 is a good time to buy back the bond market, and it's seemingly the right track. And if you look back in 07, 08, that is where the two lows were before the bond market went up. Now, this is very critical information. Please watch this, because this is going to be mind-blowing in a short while time. So remember this, the last time we saw this 83 was back in 07, 08 time. Okay, now when I put the stock market into the picture of it, this is where things get really, really insane. Now, this is a time whereby the bond market hit 83, and then it went up, right? The stock market pulled back a bit, and then it rallied again. And back in 07, when the things come back to 83 again, this time around, the bond market shoot up because the Federal Reserve came in to save the day, because they know that something is wrong. And that's where the Dow actually peaked and slammed more than 35% to 50% during that period of time. Now, if you look at this right now, guys, this is insane, because why? We are now at the same level where the bond market was back in 07, 08, and then the stock market fell. So if you ask me, there is a really probability for the stock market to pull. So if they pull back itself, how low can it be? I believe that the first stop will be at 30,000. And it's crazy now, we can even see 26,000. So this is where I'm going to tell you this. I believe that this may actually happen. Not now, not immediate, maybe over the span of next few months. I believe that this will really happen, because the facts and figures shows that Federal Reserve will likely have to cut interest rate later to save the day. And that is how the bond market actually recover. So that is the reason why I believe that why Bill Ackman decided to cut his shorts. So remember, he said this, the economy is slowing faster than the recent data suggests. So it's very clear. In fact, I replied to him. I said that this seemed to be the start of the starting. All right. You can see that it's down there. I actually replied to him in a way. So guys, let's take a look. So we all know that in Bloomberg came out, the US profit misses are being punished by the most in 4 years' time. The median underperformance of the S&P 500 companies is missing EPS by 3.7%. So that means that, right, the corporate guidance revision is lackluster, and you can see right now it shows very clearly that the performance is really below par, and this is not a good sign. And if this can continue, definitely itself that the economy is in trouble. But of course, you will say that how come Microsoft did well? Well, the different 7 of them, they are on their own, right? But if you look at Google data after earnings, is not fantastic. Although the share price is down quite a fair bit today, but still, if you ask me, it's a 7 significant counter that make the market up. But the remaining 493 companies are not doing well at all. So if you look at it right now, the S&P Regional Bank ETF, I'm really very worried for this, because you look at it right now, you can see that it's now again coming off. It was at a high at about 48, and from 48 dive back to 38 over the last 10 weeks. And the volume actually increased. This is not a good sign. The volume actually increased more than usual this week, and this is not a good sign because, last week, sorry. That means that there's very high chance they're going to go down further, and going down further, I've seen before, that's where the market break, and that's something that we don't want to see. So if you ask me, I kind of more worried than not regarding about the market right now. And you can look at it, we are down 7 days away from the next FOMC meeting, and very clear as well, right? Everyone is expecting the Federal Reserve not to do anything to the rate. So you can think about this, it was supposed to be a rate hike in November. October itself, they didn't do it. Then people expect in November, they are not going to do it seemingly. So if that continue, the pause is ongoing. And if continue like this, there's a matter of time, they'll be cutting interest rate. And if they cut interest rate itself, right, this is not going to go nice, because even the December numbers shows that, right, they're only 24.9% of people expecting a rate hike. So if everybody expect a pause, and then that will change the situation of the US bond prices. And then if you look at back the picture itself, when the bond price, when people start buying the bond, the equity market will fall. This is something that we know. So now if you look at the chart using conventional, it's something that we must take note of. Let's take a look. So you can see this basically using the trend line, we are heavily supported right now at about 33,000 level. So if any time if the market breaks down, the first support will be approximately at 32,500 region. Now, where are we right now? We're at 33,141, was 650 points away. So let's see whether 32,500 can stay supported. Now, if the market fails to stay supported, then there is a potential for the Dow to settle down at 29,800 area, which is all is possible. So traders, you need to watch out for this. 32,500 first, then it'll be 29,800. Now, of course, this is just purely on the conventional chart. So you look at the TWB chart, let's take a look. So this is a TWB chart. You can see very clear stuff that it basically tries to break the resistance, which is over here, a BNB resistance. It failed to stay above it. Then it pulled back down, break the support, and incredibly came down to the BNB -1 time one, really bottom out from here. So for traders who have been with me, they will know exactly where to buy back their position. But at the moment now, the KSI, the KCX, and the KRW really shows that the selling in the market is there. Hence, therefore, I'm not comfortable on the long side. I would rather go slow at the moment now. I'll observe this. Of course, there should be some intermittent recovery back to 33,500. But if the market can't stay above 33,000, there will be selling. All right. So with that, that's all right. I hope you enjoyed this video, and like and subscribe and share my video. This is Kel signing off. Take care. Have a great day. Bye-bye.